Hi, everyone, and welcome. I am Colin Hanks with the Oracle Applications Users Group. Welcome, everyone, to this session of OAUG e-learning, the modern business close. Consolidate your financials with Oracle's FCCS. Before we get started, I'd like to go over a couple housekeeping items. You will be on mute throughout this presentation. If you'd like to ask a question, please type it into the questions box in your control panel at any time. Once the presentation has concluded, I will read the questions back so the presenters can respond. Just a reminder, we are recording this session. It will be available on the OAUG website within 24 hours. Now I'd like to introduce your presenters, Tom Simkis with Creoal Consulting and RJ Linehan with Innovus Partners. How are you both today?
Doing well, thanks, Colin. How about yourself?
Doing great. It's all yours.
Oh, very good. So this is Tom Simkis speaking. Thanks, everyone, for joining. We do appreciate it. This is our second series of 3 on the modern business close. So we'll go through a brief introduction, talk about the series, what we're doing. We'll talk very little bit about ourselves and our companies. We do want to focus mostly on the content today. We'll talk a little bit about consolidation challenges, things that both RJ and I see in our daily lives, helping our clients, whether using cloud or on-premise applications. And then we'll try to educate everyone on why the financial consolidation and close solution is a really good solution for your company to begin automating your consolidation and reporting process. And then finally, we'll have an FCCS demo. And the use case we're going to be going through is really consolidation of a single currency company. The demo environment does have multi-currency in there, and we'll certainly speak to that. But this use case really focuses on those folks that have multiple disparate systems and do need consolidation requirements, but they're all single currency based, whether that's euros, Canadian dollars, or of course US dollars. So as I said earlier, this is session 2 of 3. Our first session was given on June 24th. That is available on the OAUG website. This is session 2 of 3. We're talking about consolidation with Oracle FCCS. And our third session is scheduled on August 28th. Consolidation and close for multinational organizations. I will let you folks know that we are leading up to an in-person session that will be given more than likely in the month of September, where folks will be able to come out and get some hands-on training on these products given by Innovus and Creoal Consulting. More details about that later. All right, so a little bit about the speakers. RJ, you want to give a brief background?
Thanks, Tom. Yes, welcome everyone. Thank you for taking the time today to meet with us and talk about FCCS. Personally, I have been working in the Hyperion space for over 20 years, 17 plus as a consultant. I am a managing partner of Innovus Partners, and I have personally been involved in over 50 EPM and BI projects. Innovus Partners is a certified gold partner, and we have a focus on making sure that our clients are successful with their investment in their Oracle products. We have an approach which we call the case method, where we look towards configuring, adopting, supporting, and extending the services that we are implementing for our customers. All you, Tom.
Okay, thanks, RJ. So this is Tom Simkis. I'm the Director of Cloud Solutions for Creoal Consulting. I've been doing Oracle for about 22 years. I started out as an end user on EBS 10.7, moved all the way up to 12.2.6, the latest release. Last 5 years, I've primarily been focused on the Oracle Cloud Solutions, whether that's SaaS, software as a service, or some of the PaaS, and of course EPM products as well. I have done over 60 full cycle implementations, whether ERP, HCM, CX, or EPM. I'm an EBS R12 certified specialist, and I have 2 cloud certifications, General Ledger and Accounts Payable. I was the 2017 OEG Star Presenter of the Year, and I am also an Oracle ACE. And I'm a certified public accountant in the state of New Jersey, and I'm a member of the Pennsylvania, New Jersey, and American Bar Association. So Creoal Consulting is a Mid-Atlantic company. We are based in Washington, D.C., actually just outside. We have an office in Bethesda. Focused primarily on federal financials. We started about 12 years ago. We have recently started moving into the public sector, higher education, and commercial spaces. with a focus, of course, on Oracle Cloud ERP and integrating Oracle and non-Oracle solutions using EPM. And that really kind of led us to the point of these sessions. So what we're going to talk about quickly is consolidation challenges, some of the things, as I said, that RJ and I see in our daily lives, and why we think this is a great tool. So some of the challenges facing the finance organization, it takes a long time to close, especially if you don't have automated tools in place. And there really is a tangible, real value to a accelerated close. So those that collect and close the reports within 9 days only have a few days to analyze that data and make decisions. Whereas those folks that can close in 3 days and report by day 6, obviously it's simple math, it gives you 3 more days, but what that really means is it's additional time to analyze. So if your forecast was $1 million in revenue for the prior month and you only did 900,000, you can see hopefully why that is, and certainly make adjustments to your supply chain or your ordering so that you don't have any leftover inventory on hand or things of that nature. So we have found that those companies that close quicker and get their financial reports out faster have better information, access to more timely information, and make better business decisions. So some additional challenges facing the financial organizations, complex legacy systems. So Accenture did a high performance study. Oracle was kind enough to post this study about a month ago, shortly before we did the financial close, and that's where these numbers come from. But they talked to some CFOs and some finance folks, and these are the 4 things that they all agreed on was problematic. Complex legacy systems, managing complex needs of their stakeholders, new and complex risks, and finally difficulties in standardizing finance processes. So pulling systems together using Excel spreadsheets, consolidating outside of your ERP system, and managing your close outside of your ERP system is a concern of most finance executives, and it is a problem. It's an issue that certainly slows your close down, increases audit risk, and makes reporting more difficult. So we have here is a typical finance organization. This is not meant to be gospel. RJ and I have seen many organizations, and they are certainly not all structured like this, but this is what we typically see. And we highlight this because those folks in the middle, the people under the controller and the FP&A folks, the folks that are responsible for AR and AP and GL, consolidation and financial reporting under your controller, and then your FP&A folks that have forecasting, analytics, and BI. Those are the areas which cause much consternation, and those are the areas that these sessions really seek to address and educate you, the users, on the use of the tools that we're going to be presenting and how they can make your lives better and your close and your reporting more streamlined. So here's the use case. As I said, this is session 2 of 3, and this is a very straightforward use case. We have multiple subsidiaries. We show you subsidiary 1 and subsidiary 2 on the right-hand side, and then we have a US dollar parent. They track the close outside the system. The subsidiaries transfer balances, whether that's via Excel or CSV file or some other method. They use some tool to produce reports, again, probably Excel. Maybe they have some consolidation system, but in our situations, we see quite frequently not. They manually record topside elimination and adjustments. And the biggest issue with that is those topside entries don't always get pushed down to the subsidiary systems. So at the end of the year, you have situations where your trial balance and your consolidation tool, whether it's Excel or something else, doesn't necessarily reconcile to what you presented on prior period financial statements. And then, of course, they use that to generate the reporting package. So that's the use case, relatively straightforward, and we hope to address some value that you can get from this tool to streamline the process. So what we're talking about here with this use case, again, multiple GL systems, whether that's NetSuite, Oracle, Oracle Cloud, Oracle EBS, SAP, PeopleSoft, JD Edwards. Who are the actors? So in a use case, you really should have actors. It's a single parent here. And your controller and your accounting managers are the folks that you're typically going to be interfacing with, and those are the ones that are going to be driving this close process. So some key features of FCCS, and RJ is going to show a good bit of these when we get into the demo, that we feel makes this product excellent and a great tool for streamlining these processes. It has a close calendar. That close calendar is easily integrated with FCCS. You can take your current close schedule if you have an Excel, download a template from the FCCS system, load your close schedule and import that template. And from that, you'll get automated emails, task reminders, and notifications about what you need to do to close your books. You also get tools for data loads, bringing your data in from Excel or another mapping engine into the tool, consolidations, advanced reports and journals, and then of course we get some supplemental data as well. So why FCCS? RJ, I want to let you kind of chime in a little bit on this one before you do the demo, just so your voice is nice and warmed up.
Sure. Okay, so one of the key benefits of FCCS is that it is ERP agnostic, okay? So regardless of what ERP system you're running within your organization, FCCS does not care, okay? You could be running NetSuite, you could be running one of the Oracle ERP systems, you could be running SAP. FCCS plays nicely with each one of these systems, as well as what you don't see here on the slide. Again, the goal here is to take your close and consolidation processes to the next level and not have to worry about building out complex integrations in order to be able to satisfy your reporting needs. So again, because FCCS is a key component of the EPM cloud offerings within Oracle, the goal here is to ensure that you are successful and efficient in closing your books. So what is the FCCS value proposition? And it really depends on who it is you're talking to, okay? Because there are many different people within an organization that have competing desires in order, or goals in order to accomplish. From an IT perspective, IT is focused on key different things in order to be able, that are more related to, reducing costs. So FCCS provides the ability for organizations to decrease the cost per user. It also eliminates, because it is a SaaS offering, the need for hardware upgrades. Okay, so gone are those days where you need to invest significantly in hardware in order to stand up an on-premise solution in order to satisfy your close and consolidation requirements. You also, because FCCS is a SaaS offering, Oracle pushes out the software upgrades, and it's seamless to the customer. Okay, those continuous upgrades happen on a periodic basis. Okay, and again, the intention here is to ensure that you are completely up to date on the latest and greatest features that are available within FCCS. I'm also going to talk a little bit more about, the functionality within FCCS as it pertains to or compares to the on-prem version, which is Hyperion Financial Management. It also gives you the ability to access new and application enhancements. Okay, Oracle is spending a lot of money, time, and effort to ensure that FCCS remains the Cadillac of the close and consolidation space, and those application enhancements become available to the customer on an ongoing basis. FCCS is also simplified and self-serve. So if you think about it, it's a tool that was designed by business users for business users. There's a limitation in the IT interaction that is required in order to stand up and maintain FCCS. Again, this is what IT organizations are looking for. They're looking for those self-serve solutions so that the business users can do their job and not have to constantly be interacting with IT. There's also a significant reduction in administration, especially when it comes to those organizations that are currently closing their books or running consolidations in the Excel world. And then finally, you have a much more painless integration when leveraging the cloud platform. Okay, as I mentioned earlier, because FCCS plays so nicely with not only Oracle's own ERP solutions, but also third party, okay, you have that, that seamless integration that's necessary in order to run a successful close process. You want to take it back, Tom?
Sure. Thanks, RJ. So the value proposition from a finance perspective, we put a couple bullet points on here, and just as a background, the reason we give these is because if you are a user and you like what you see and you'd like to figure out how to approach, whether it's your controller from a finance perspective or maybe it's your CIO from an IT perspective, we're trying to give you guys the ammunition that you would need to make a case for having someone come in and show you the tool and how it can really, drive some business value. So lower audit risk was the thing to me near and dear to my heart as a CPA. And how do we think there's going to be lower audit risk? Automated consolidation reconciliation. So if you do have multiple general ledgers and they're Excel based, there's certainly an audit risk there with regards to reporting and the process you go through to get the data together. There's also some great clean auditable reports that you can run, and you can run them out of Excel if you'd like. So using SmartView, you can pull in your consolidated reports and show the process nice and clean to your auditors, and really, we expect it to reduce your audit time and audit risk. Of course, you can improve and enhance your reporting process. There are valuable pre-built dashboards. RJ is going to show those to you. It's actually one of the first screenshots that we have. And of course, you can get your report outputs in many different Microsoft formats that you're used to and that you appreciate. Whether it's Excel, Word, or PowerPoint, you can also export them to PDF. Next, it's an integrated close process. So the close process does not have to be manual any longer. You don't have to have your tasks tracked in Outlook or some other tool that doesn't necessarily integrate with your ERP system. We can have this tool that integrates quite nicely, is streamlined, and really is built for end users. And of course, I like this one a lot, which is a small step to cloud. I have a number of clients that are either trying to go to cloud or they want to go to cloud, and it's more like a checkbox, and I don't necessarily support that, but I do get it. I've spoken to another CFOs that tell me I got to get on cloud, and I say, why? And they say, because the board says so. This is a great tool. It really is not a large investment of time and or dollars. And if you need to keep your legacy systems for whatever reason, because they're specific to your industry, you don't necessarily have to go to a new ERP system. You can certainly keep those in place, but still have a best-in-class solution for your consolidations, close, and reporting, where you're making the most out of your current systems. So that's the value prop for finance, and we went over the value prop for IT. At this point, we're going to do a FCCS demo. RJ, take it away.
Thanks, Tom. Okay, so what we're going to cover today during the demo are three key high-level features of FCCS. Now, let me just preface this conversation with a couple of points regarding this whole webinar series. You can really think of this as like a movie trilogy without any of the special effects. We had a lot of questions from the people who actually attended the last webinar series, and we did a real deep dive into the closed features of FCCS, and people were asking us about reporting and consolidation, and we said, well, if you want that, you've got to come to this webinar series, or this webinar. So, and then the next one we're going to be doing, we're going to extend and look a little bit further at some of the other features like supplemental detail, multi-currency, and a lot more of the advanced features that FCCS offers. So, but for today, what we're going to focus on are the core reporting capabilities that FCCS offers. You have, again, FCCS has a lot of versatile reporting capabilities that are built right in and come right out of the box. I'm going to show you the flexible integration features that are built on proven technology. Again, a lot of people, we call it data management, but the underlying tool is for those of you in the HFM space, is FDM, which is also built on ODI. Again, two proven technologies that have been around for a long time in the Oracle space. Then what we're going to do is look at some of the journal features that are available within FCCS. And again, it's full capabilities to be able to not only record journal entries and adjustments, but also to provide a complete audit trail and control of those features. And then finally, we're going to take a step back to our previous webinar and show you how Close Manager integrates with these consolidation and reporting features. So first off, we're going to look at the reports that is available within FCCS. And with FCCS, you get a lot of cool reporting features. We'll start with the dashboards. These dashboards are available within the FCCS portal. They come right out of the box. You're essentially, doing dragging and dropping when you're building these dashboards. And again, the goal here is to get information to senior management, to users, to analysts, to accountants as quickly as possible so they can make better and more informed business decisions and do it much sooner. So it's interesting. Last week I was talking to a controller of an organization, and we spent a half hour as she walked us through the process that she follows to run manual queries out of her ERP system, drops them into Excel, does a number of manipulations within Excel, validates that data, and then she has to manually build out these reports and these graphs within Excel. And she says it takes her about a week each month just to actually build this out. And she, again, feels that pain. And I'm sure there's a number of you on the call today that, this sounds very familiar. Well, again, FCCS kind of takes all that pain away by allowing you to leverage the dashboarding capabilities that are available. And what we see here is an income dashboard, okay, that displays in the top quadrant of the dashboard key metrics that, again, are very relevant and of interest to accountants or business users who are managing the organization. These, of course, are completely configurable as well. If you are interested in looking at sales, gross profit, but you want to see maybe net profit or different types of metrics within the dashboard because they're relevant to your business, to your job, you can certainly configure the dashboard to display those types of metrics. But the goal here is to show you, to get to the user that information as quickly as possible. You'll also notice, and again, we kind of specifically designed this this demo so that specific numbers or information comes glaring out at you. So as you can see, net income is a glaring negative $123 million. Again, the goal here is to ensure that relevant information that business users have to act upon are right there staring at you in the face so that you can act on it. Tom, is there anything you want to add to this, or do you want me to move on to the balance sheet?
I just want to make sure we got paid before we put this dashboard up for these guys.
Yes, definitely. Okay, moving on to the balance sheet dashboard. Again, another out-of-the-box feature that's available with FCCS. This particular dashboard focuses on balance sheet metrics that are relevant when you're managing your point-in-time balance sheet. To the left, you'll see we have a pie chart that distributes key balance sheet metrics. Okay, and again, shows you right up front, what are our accounts payable? Okay, what are our cash and cash equivalents? Okay, and then to the right, we have again key balances that make up your balance sheet. These dashboards can be configured so that rather than showing point in time like we're doing in the upper right-hand corner for January, we can actually show a trend over time as well. And we can do that in a grid format. We can do it in a line format like we're doing in the bottom right quadrant. We can show bar charts. Again, the goal here is to get the user up and running as quickly as possible, and then, again, configure the dashboard to meet their user needs.
And RJ,
Tom, anything on this one?
All we had to do for this was just map the accounts to the categories, and the balance sheet was pre-built, correct?
That's correct, yes. And actually, we're going to show that with when we go through the integration. But that's a really good point because, again, the goal here is to limit the time and effort that's required in order to get data from your ERP system into a consolidation tool like FCCS in order to, and then also to make it maintainable, okay? But yes, what we're doing is we're just connecting the dots here when we're moving data from ERP into FCCS.
Okay, great, thanks.
Okay, moving along to cash flow, which is probably one of the top metrics or financials that is on any accountant's mind or controller's mind or CFO. Okay, again, this is good comment, Tom, because we want to make sure we got paid first before this organization, we handed this off to this organization, because you can see that glaringly this company is losing money. And why are they losing money? It's actually not from operations. What it is it's from their investing activities. So again, something is going on here that needs to be corrected. These dashboards, as you can see, become very actionable. You know, when you get information as glaring as you're seeing here on this dashboard, it provides the opportunity for users to actually make a decision or throw that up the food chain so that people are aware in order to better run their business. Anything on this, Tom?
So just a quick note for folks, this is a cash flow dashboard, and the cash flow statement that comes from the system is a cash flow using the indirect method. So that really just means a net change. So when you see RJ load his balances, one of the dimensions that RJ will have to load is something called a movement column. And so you'll have your starting point, whether that's the beginning of the year or the end of the prior year. He'll load his movement to the current period, and that's really what the indirect cash flow method is. It does come out of the box. You map to the categories, but just to point out, if you use the direct method, not even God could get you a cash flow statement from the system.
Yeah, actually, Tom, that's a really good point. What I'll do is I'll make it a point when we go through the integration to call out the movement dimension, because they can actually see a specific example of how we're mapping accounts, leveraging the movement dimension in order to be able to build this cash flow statement right out of the box, or make it available once you completed your income statement, your balance sheet. Okay, so now that we've had a taste of the dashboards, let's take a look at production reporting. Now keep in mind, before I show you the first report, I want you to be aware that the report that you're about to see, and you're going to see it over the course of 4 slides, are actually the exact same report. They're just shown in 4 different tools. And I think this is probably one of the strongest or the biggest strengths that FCCS, as well as the other EPM products, bring to the table. I have not seen other tools out there that can provide the flexibility and versatility of the reporting that these tools can. So the first, what we're going to be looking at is an income statement, a standard income statement report, okay? And what you're looking at it right now is in HTML format. So what a user would do is they would log into FCCS, they would launch this report in the browser, and then it's completely interactive. So in the upper left-hand corner, you'll see there's a point of view there, and that point of view is completely interactive. So if you're interested in looking at an income statement for FY16 or FY17, then you would click on FY16 in the upper left-hand corner, and a little pop-up box would display, and you could change that point of view and display your FY17 income statement. Okay. Again, the goal here is to provide as much flexibility to the user and meet the needs that they have when it comes to reporting. The next report, again, exact same income statement report, but now we're looking at it in a PDF format. Okay, so what FCCS allows you to do is a couple things when generating production reports that need to get distributed on a mass scale, or you need pixel-perfect reports that need to be printed and published in a closed book or a binder. What FCCS does is it's leveraging the same report template that you were looking at when we were displaying it in HTML, okay, but it will then generate a PDF version of that report. These are completely configurable so that if you'd like, you could put your company logo on it. I've seen organizations that have very high standards when it comes to specific formatting, whether it's font, its size, its color, its number formatting. Any of those features that are a requirement for highly formatted reports do become available within the FCCS PDF version of the production reporting. And then also what FCCS does is it allows you to create what we call a report book, so that if you have a list of of reports that get generated on a periodic basis, say monthly, quarterly, or annually. What you can do is you can actually create a report book, and you can schedule it to run, and you can publish it. That set of reports can then be published to the portal and made available to users, or it can be emailed out to the users, so that if you have a quarterly package that needs to get emailed to a set of users, you can schedule it to run, and FCCS, once those reports are finished running, will email it to the appropriate users. So again, a lot of flexibility here. And keep in mind, this is the same report template that you saw when you were viewing it in HTML format. Now let's look at that report format in Excel. In Excel. So again, one of the concerns a lot of people have when talking to them about FCCS or adopting a new tool is that we're going to be taking Excel away from it. And that is not the case with FCCS. What you see here is the exact same report template that you were looking at it in HTML and PDF view, but now it's actually dropped into Excel. It's, again, completely formatted and aligns to the look and feel that you saw in PDF and HTML. And what it does is it allows you to actually create these reports in Excel and distribute them if you'd like, or they can also be retrievable, okay? So in other words, if you actually want to leverage reporting out of Excel and change the point of view, you can actually refresh this report right from Excel, and SmartView will pull that updated data into FCCS. Okay, so and just so you're aware, this is what we call a highly formatted report that is dropped into Excel. We have ad hoc reporting, which I'm going to go through in 2 more slides. Again, which gives additional extended flexibility for satisfying your reporting needs. And then finally, we have this exact same report in Microsoft Word. Again, I have not come across tools that can support pulling reports into Microsoft Word and actually providing it in a highly formatted process, making it available so that you can, it's interactive so that you can retrieve on it and update it. And again, so if you think about it, we talked earlier about budget books and publishing binders. Okay, if your binder or budget book is in Microsoft Word, if it's in Excel, and what I don't show here, but the same report is also available in PowerPoint. Again, all 3 of those Microsoft Office tools fully support the integration with FCCS. So, and again, this is all built off of one report template. Okay, so just you build it once, and it's available in all these tools. Yes, Tom.
One thing to note here that's, I think, important really for PowerPoint and Word, RJ put the full template in here, but if he wanted to, he could have put components. So why that's important is if you want to do your management reporting deck in PowerPoint and put some verbiage around it and just have certain fields, you can certainly do that. And updating your point of view allows those numbers to automatically update. So great thing about that, if you're putting your story together, whether that's for a 10K, 10Q, or just internal financial reporting, if you have to book a topside journal entry, your story or your deck doesn't entirely have to change. Using SmartView and those tools, you hit refresh, the numbers change, and your deck is automatically updated.
Right, it's better than sliced bread, right?
Exactly.
Okay, so now moving along to our final report, type of report, SmartView reporting. So again, what we're seeing here is I actually brought that report down into what we call query format. And what this does is it allows users to interact with the report as an ad hoc reporting capability. So again, FCCS through SmartView, which is the add-in to Microsoft, okay, that allows connectivity between FCCS and the Microsoft products, I'm able to actually query FCCS directly and build my own reports as I see fit within Excel. Okay, so I'm being cognizant of time here, and I want to make sure I get through all this content. So I'm going to jump right in and talk quickly about another form of reporting / input, which is the data forms. And again, a lot of times what you'll see is when organizations are closing the books, okay, and they need they have requirements around their financial reporting. Okay, the forms allow you to actually enter in additional information which may not necessarily be available in your source system. So in this particular example, we're leveraging a form to actually track an inventory of debt that an organization might necessarily have. And again, all of that metadata, or that information that is relevant to tracking your debt, but may not necessarily be, you might not necessarily make that available within, like, say, your ERP system or whatever, can be made available here within FCCS. Tom, any comments on this?
No, I mean, the form looks great. You guys, these are nothing intelligent. I mean, you did a great job on this, and these are certainly configurable, and you can use it to track. I think a great use case for these is if you wanted to enter something that was non-financially related, have it appear in a report, you can certainly use these forms for that as well.
Correct, yes. As we did here with the investment form too. Okay, so if you have, if Treasury has a requirement where they need to track all of their individual investments, again, and there's information that's non-financial related, okay, that information can be captured here within FCCS through the input of this form. Completely interactive, available through the portal, as well as in SmartView. So these forms are made available so that if you don't want to work within the browser, you want to work within Excel, you can open up these forms within Excel and work with them there as well. Okay, so we got through reporting. Let's talk a little bit about integration. Again, very high level here, where integration is broken down into three parts. The first part is being your source system and your trial balance. Okay, pulling that trial balance from your source system, and then what are you going to do with it in order to get it into FCCS. Then we use in the second part, we're going to use what we call a tool which is called data management, as I mentioned earlier, which is the on-prem version of FDM and ODI. Again, there are actually 4 high-level steps that you follow in order to configure the integration between your trial balance and within data management to get it into FCCS. And then the final step is going to be to look at the trial balance within FCCS and do validation. Okay, so what you see here is a snapshot of a typical trial balance. Okay, what we need to be aware of here is that we're not, when we say we, okay, and who's doing this, these are the business users, right? This is not IT. Okay, one of the strengths of data management is that there is little but to no IT involvement when actually building out these integrations, and that's done on purpose because again, the business users have the innate knowledge of exactly what the mappings are that's required in order to get it from the source system into FCCS. So who better to do it than the business users? So what you're doing is you're employing existing interfaces. Okay, FCCS is flexible enough so that if you have existing source files or interfaces that you're pulling from your ERP, you can actually leverage, more often than not, you can leverage those existing interfaces and bring them into FCCS. It has very support for very flexible source system formats. So again, if the format isn't exactly aligned to for FCCS to be able to load it, that's what data management is for, to do that mapping. As I mentioned, it's a user-maintained integration, and you're using or leveraging Microsoft Excel to do a lot of this work. In fact, what I'm about to show you with creating the mappings, I'm doing it through the web forms. You can actually bring those mappings down into Excel, manipulate them with Excel, and then upload them back into data management. So to kick things off here, data integration, the source target configuration. As with every step or any tool, you have to configure your source, your ERP system, and your target, which eventually would be FCCS. Okay, so high level, what does this look like within data management? Well, this is what we call our target application, which is, again, mapping our dimensionality, or how the data, the attributes of the data that we're going to load into FCCS. The information that you are pulling, okay, out of the ERP system and mapping it to the application, okay, or the dimensionality that defines the application within FCCS is done in this screen. we have the next step, what we call an import format. Okay, and the import format, what that does is that allows you to map the actual interface itself. So if you think about it, if you're pulling a flat file out of your ERP system and you have number of fields that are used to define each record within that flat file, okay, this is where you're going to actually perform that mapping. Essentially, think of it as connecting the dots, taking the file that comes from the ERP system with different fields and mapping them or connecting the dots so that that data management can understand what those fields represent. And you'll see in the lower left-hand corner, that's exactly what we're doing. Is the example that we're working with has a file with 5 fields, okay, and those 5 fields are mapped to specific target dimensions within our application, okay. Then what we have is a location, okay. Think of a location as part of your target, okay. Our target is FCCS, but it's a slice of pie, okay. It basically what it represents is it's a slice of pie that you're going to actually import or load to, okay, within FCCS. And what you're telling data management is, I created an import format, and that import format, which tells me what my mappings are, okay, from my file into data management, I want to use a particular import format. I want to use a specific location or application, which we call FCCS, okay? So after we've gone through our location, our mapping of our source and target applications, we're now going to perform the mapping and data load workflows. So to do that, we follow 2 steps, okay? The first is our data load rule, okay? And what the data load rule does is it tells us where our file, the file that we're going to be using, okay, we want to make sure that we're pulling that correct file to load to data management. What we're doing here is we're actually telling us data management, you know, where we're loading from and where we're going to be loading to, okay? And then finally, what we're doing is we create what we call our data load mappings, okay? And we do this for each dimension that's represented within FCCS, okay? And we create what we call our mappings, okay? So what you're seeing here is we are mapping a source value, okay, from the file that we've loaded to a target value within FCCS. So what you're seeing here is any account that starts with 11, we want to map that to an account called cash. Any account that starts with 12, we want to map that to an account called accounts receivable within FCCS. Okay. So again, for each dimension, we're doing that. All right. And what we want to make sure happens is that, you know, we have the flexibility in order to perform these mappings. But again, what's important to note here is that this is being done by the user. Okay. The user has that knowledge of what these mappings should be. And these interfaces are available right to the user through the portal. Okay. And as I mentioned earlier, what you're able to do is if you have these long mappings or long list of mappings, and again, sometimes it can be cumbersome working within a browser, you can bring these mappings down into Excel, okay, update them in Excel, which is much more efficient, and then re-upload it back into FCCS, again, just for efficiency purposes, okay? And then finally, once we have the entire integration set up, what we do is we actually run a workflow. And one of the great things about data management is it has the 4-step process in order to ensure that before any data hits FCCS, that it is imported successfully into what we call data management, that we actually validate the mappings, and that we can actually export it from data management into FCCS. And you'll notice that this screen has a column for each dimension that you're loading to, all right? And that's done for a reason, because what will happen is if there are issues with mappings or errors that are encountered, okay, you can see right you can stack these mappings right next to each other and see how the file is how the source file is getting mapped and loaded into FCCS. And again, a lot of errors will pop right out at you. Again, the goal here is to make it as easy for the user as possible in order to correct any mapping errors. And then once we finally loaded our data into FCCS, now you have the ability to leverage what we call check reports within data management that can be run to verify that the data was loaded properly, and then create a report, okay, that proves it, and then can be either published or saved. Or you can actually go into Excel, and through SmartView, you can actually retrieve that data. So if you recall, my original file, which had 5 fields, okay, is now mapped and loaded properly into FCCS. Okay, and in one note, what you'll notice earlier when we were talking, what we did was here. This is the movement dimension when we were talking about cash flow statement. All right, and what we did was, let me just jump back there. I think I had that.
Bottom left.
Yes, it's actually here. Yeah, thank you. You'll notice here what we're doing is we're actually mapping accounts. Okay, based on the value, the account value in the record, we're mapping that to a corresponding member within the movement dimension. So this is exactly how we define the movement in order to build the cash flow statement. Sorry, I missed that one. Okay. So finally, I'm just doing a quick time check here. We've got 11 minutes. Journals. What you see here is an example of how journals can be recorded leveraging FCCS. Tom, maybe you can add some color commentary here.
Sure. Two things to note. The first one is the last thing that RJ went through was the check. I think it's probably one of the biggest values of the tool. So you've got a nice clean audit trail. You've got a way to check it and a way to submit a very quick report that you can give to your accounting manager, your auditors if need be, to make sure that your data got in and all of it got loaded properly. What we have here is a very simple intercompany sales adjustment. And this is a top-side entry. The great thing about this is this top-side entry can automatically be pushed out and loaded to your legacy systems at month end, right? So as part of your close process, we can create a procedure or a task that says record top-side adjustments and have this automatically go out to your people. So a real simple journal entry here. We're debiting revenue and we're crediting cash. And the reason we're doing that is reversing your company sale. And what will happen is when we post this based on our mappings, we can have intercompany journal entries post automatically so that our balance sheets are still in balance. A real good feature. There's a lot more functionality around journals, but we didn't want to get into that too much. As RJ said, we will hit journals quite a bit when we do the multinational, multi-consolidation one in August. Go ahead, RJ.
Oh, thanks, Tom. Okay. So finally, just to wrap things up with regards to the demo, I just wanted to kind of tie this all back into Close Manager and the close tasks that are available, as well as the reporting. So what we reviewed in our first, or we did the deep dive that we did in our first webinar, as well as what functionality we reviewed here, can all be tied in so that, as you're going through your close process, okay, the dashboarding capabilities, okay, as well as the ability to better manage your close. That functionality is again aligned to the consolidated and reporting functionality that we just reviewed. Okay, so again, the goal here is to leverage both the close functionality that exists within FCCS and leverage the consolidated and reporting capabilities of the tool, okay, in order to ensure that you're not only closing your books efficiently, but you're getting the reporting that you need in order to make those better decisions, okay? So, all right, and then finally, just a refresher, and again, this deck, as well as the webinar, will be available on the OUG site. So again, these last 3 slides were more to kind of tie back, okay, our reminder of what the fact that we're building on these each of these webinars. Okay, and that's it for the demo.
Thanks, RJ. So as you can see, folks, there was a lot of material to go through. I think RJ did a phenomenal job condensing a huge amount of functionality into a little bit less than an hour. So the next webinar is on consolidation and close for multinationals. That'll be on Monday, August 28th at 1 p.m. Eastern Standard. We have a few minutes for questions if anyone has any. Colin, I'll turn it over to you to moderate and see if we have some questions.
Awesome, thanks guys. Yeah, we do have a couple, or we do have actually a good bit of questions, so I'll probably have to send these to you so you can respond. To start off, when we talk about EBS close, are we able to view the actual period close status in EBS or manage it from FCCS?
So the question is, could we actually see the status of periods as they exist in EBS, and could we manage them from the FCCS tool? So RJ, I'm not sure if you can answer that question or if you need a little clarification on that.
Yeah, no. Okay, so I don't know the question off the top of my head, but I'm thinking about it theoretically. So if the close status of a period, okay, within EBS, can you actually pull that data over? Like, in other words, is there an attribute that you could pull over that tells us? Yes. Then the answer to the question is yes. Okay, so then the answer to the question is yes. However, I wouldn't call that might be a configuration. That wouldn't be considered out of the box. So again, any type of attribute, okay, that you can think of that's relevant to doing reporting, okay, can be brought into FCCS. So again, that's one of the strengths of the tool, is providing with that flexibility. So the answer to the question is yes, it can be done as long as it can be pulled from the source system, but I would consider that a configuration, not an out of the box.
Okay. And then this person's talking about Oracle ERP systems, just to give you a background on their question. Their question is, HFM holds the GL balances, but details of expenses revenue resides in AP and AR. Will these reports drill down to these subledgers?
So the short answer is you would use the same drill down functionality as exists in your current ERP system. So when you integrate FCCS with Oracle Cloud ERP or Oracle E-Business Suite, the way that the mapping would work would be is you would go down to the account balances view, just like you would if you were going from an FSG in either of those applications, and then you would go into the subledgers. So your drill down is always based upon your system. We're not going to bring those AP and AR details into the FCCS tool, but we will be able to drill back using the CCID view. So that is also a configuration. Work would need to be done to enable that, but it certainly is supported.
Okay. Do the journals in FCCS get pushed back out to EBS?
That's a great question. Typically, no, but it is possible to do it. Okay. So again, it really depends on what is the business need. Okay. If those journals do in fact need to be booked because again it's required in order to completely close the books, then FCCS has the capability to be able to push those journals back. But I have seen instances where most of the journal entries and topside adjustments that are being done in FCCS are, again, specific to FCCS, and because FCCS is SOX compliant and it has the needs in order to satisfy the reporting requirements, maintaining those in FCCS is sufficient. Tom, keep me honest here, so I just want to make sure.
Yeah. So what our rule of thumb is if it's a journal entry that relates solely to consolidation or eliminations, we would normally not push those back. You would keep those journal entries up in FCCS. But if it's a journal entry that relates to reporting accuracy, for example, if you forgot to book an accrual in one of your subsidiary ledgers, that journal entry would absolutely push back to your subsidiary ledger so that it would tie. So that'll be a reversing journal entry that we would have in the FCCS tool, and when it reversed, we would push it down to the subsidiary ledger to keep everything in sync. Okay.
Okay. And then how do you do intercompany eliminations?
That's done really a couple different ways. Mostly it's done with the mapping. So when you have different company values set up, the tool knows them and then we set up a mapping so that it knows if you booked a company 1 and 2. We provide a value to do the intercompany journal entry. As far as the eliminations goes, that's part of the setup process. There's a bunch of different ways you can do it, but we'll typically use a separate company value so that the eliminations are nice and clean, and then the consolidation or adding of the multiple company segments and the elimination company is what generates the elimination in the trial balances.
Hey, Tom, I like your answer a lot better than mine, because mine was going to be come to webinar 3.
Oh, well, I figured, no. We'll actually show that, just so you know that.
Yeah,
we actually
that's part of that.
In the 3rd webinar. RJ is going to go through a couple of use cases where we actually value multiple currencies, translate them, revalue them, and then, of course, then generate an elimination entry. Great question, though.
Okay, and do we have time for 2 more questions?
RJ and I do. We're here all day long. Try the wheel.
Okay. All right. We have the Hyperion on-premise version of this. What is the difference with the cloud version?
Okay, so the messaging that we've received from Oracle is that there are 3 features right now that are currently preventing complete parity from HFM to FCCS. One is the limitation on the number of custom dimensions that FCCS supports. Currently, right now, it's 2. But again, the messaging that we're getting from Oracle is that, again, they're very aware of the, the lack of support, or the limitation, I should say, of support for custom dimensions. And they're pushing, and the guidance we're getting is that that's going to, more than 2 custom dimensions are going to become available late summer, early fall within FCCS. The other is the support for custom consolidations through rules. Again, another feature that is scheduled, and guidance that we're getting from Oracle is that it's going to become available in late summer, early fall. But again, those are the key features or differences between HFM and FCCS right now that's kind of preventing that parity. But again, Oracle is I've spoken with product management at Oracle. They're very aware of it, and they, of course, you can't turn anywhere on around on Twitter or LinkedIn, or even Oracle's going to the cloud, and they realize this. So they want you, if you're really considering it, to move your existing HFM application into the cloud. And again, so again, that parity is coming very, very soon.
Okay, and last question, since this is a system as a service, how often is the software updated? What is the strategy for testing for updates? And sorry,
so Oracle, go ahead, RJ.
Go ahead, Tom, sorry.
I insist.
Nope, it's all yours.
So
okay.
Oracle has a couple different strategies. During implementation, you can have your systems patched in sync, meaning your dev and test in your prod environment. So you can have a service request that they're patched in sync, and they're patched monthly. You can move to a quarterly patching strategy once you go live, which is something that we recommend. With regards to your testing, we really do recommend you have a series of use cases that you go through and execute in your dev environment. It is new functionality in addition to bug fixes that are pushed out on a regular basis. So you certainly do need to stay on top of that. With the benefits of cloud, which is updates and latest and greatest software, there also comes some overhead, which is you do have to test on a continual basis to make sure that your system functions as intended.
Okay, guys, that is all for the questions we have today. I want to say thank you to Tom and RJ for another great presentation for our 2nd webinar in this Modern Business Close series. If you have not checked it out yet, please go online to oaug.org for our 3rd series webinar that we'll be sharing with you in August. So check that out if you are available. Please join us. Again, thank you again for joining us today, and we look forward to seeing you on future webinars. Thank you, everyone. Have a great week.
Thanks, Colin. Thanks, RJ. Bye.
Thanks, Colin. Thanks, Tom. Bye.
You bet, guys.